Indigo surges as crude slips to $76 per barrel. Domestic air traffic too picks up with volumes almost hitting pre-COVID levels of 4 lakh flyers a day in December.
And Vartak Vabag gets an order of around 260 crore rupees from Romania. The stock is up a good 8.5%.
Poonawalla FinCorp says its board will meet on the 14th of December to mull a fundraise or even a stake sale in Poonawalla Housing Finance. The stock higher.
ISMD enters an agreement to sell its 40 megawatt captive power plant. PSP Projects wins a 122 crore rupee order to construct residential towers, while JP Associates board will meet later today to discuss their divestment plans. All these three stocks are reacting positively.
And it's a subdued listing for automotive construction and agri-machinery parts manufacturer Uniparts. The issue had been subscribed by over 25 times, but the stock lists with a discount of about 2% to its issue price.
Hello and welcome to Chartbusters. I'm Naishal D'Souza and joining me is Mangalam Malu, who's come back after a good holiday. Well, Mangalam, hope it was a cracker. Middle East, I thought you were going to go ahead and, you see the World Cup, but you're back before the semi-finals.
Yeah, before the semi-finals, because I don't enjoy football as much, but I did catch some of the matches out there. They were pretty good, the environment, etc. And I just think two things happened, and I may not take credit for that. One, I went to the Middle East, oil prices are down $76 per barrel. And Wednesday is when the market started to fall, and I'm back, and hopefully it has recovered from the lows, almost 157 points. And, it was getting oversold or easy to short the market over the last few trading sessions. And now it seems like maybe there has been a recovery and that dip has been bought into.
Well, that's right, Mangalam. And the call earlier today was 18,350. Yeah. That should be a bit of a support zone. The low of today is 18,345. And from there, we've seen a bit of a bounce. So that trade has worked out, buy the intraday low and hope for a bit of a bounce. The 18,400 put did see a fair bit of writing in Friday's trading session. So that gave us the cue that 50-point premium, well, you deducted from around that 18,400. And that's why you saw a bit of a bounce from there. But let's get straight to an exclusive then on the windfall taxation. With crude prices falling to around $76 a barrel, sources are telling CNBC-TV18 that the government may again lower windfall taxes at its next review meeting. Sapna has been on top of that story. She joins in to fill us in with more on that. Sapna.
Hi, Nigel. This is likely to be on expected lines. If you just compare the 2-week average, and that's what is taken into account for calculation of windfall taxes, including there also the cracks. So overall, the journey is southwards very clearly. So there is an expectation that this trend and the review happens every 2 weeks around 15th of December. You may see a further taking downwards in the diesel export duties and across your crude petroleum. So this is what the scenario is, but we should also keep it.
All right, we take that point, Sapna. Thank you so much for joining in. We've got you on a scratchy line, but we get that point that there could be a revision in windfall tax, and as a result of which we are seeing some bit of a rally in a lot of these stocks. In fact, Reliance has moved to the high point of trade, and that is the one which is actually supporting the Nifty recovery. And apart from that, we have seen a big move in all the other oil and gas stocks as well. Let's move on and let's get in Shivangi Sarda for a quick technical check on the market. Shivangi, it has been a strong recovery from the lows, but we're still away from fresh record highs. And at the same time, while there has been recovery, as we go ahead, levels of 18,600 and plus, there could be some congestion. What should one do in a situation like this?
Good morning, Nigel and Mangalam. Thank you for having me. So we've seen that, Nifty index opened on a slightly negative note today on account of weakness. But then again, we saw good recovery and support-based buying from 18,350 zones, which is quite positive. So after a little bit of a breather that we saw last week, the index is now again, moving ahead in the bulls are getting back in action. And we've seen a good amount of buying over here, which is keeping the index afloat. So, some sort of a pause can obviously be seen because, the negation has happened on the weekly basis. But overall, the structure remains quite positive. Even on the derivatives data front, the index is quite positive. And now, till it holds 18,350, we could see an upside towards 18,650 zones. So these two levels could be an important to watch out for. Now, if we look at Bank Nifty, the banking index has been, outperforming the broader market since the last 7 sessions. Banking IVs have also cooled down quite a bit, which is supporting the bulls at higher zones. So banking index looks more positive than the Nifty index, and it's a clear-cut buy in the banking index, even at these levels. And as we can see, the bulls are cheering at record high levels. So banking index is a buy with a target of around 44,000 and a stop of around 43,250 levels.
Okay, all right. Thanks a lot for that, Shimangi. You want to fill us in with a couple of other picks as well?
Yes, absolutely. So my top picks for the day would be, first one is a heavyweight, which is HDFC Bank. We've seen in the December series so far, we've seen a lot of long built-up OI addition over here, and stock is continuously making higher lows from the last 3 months. It is now coming out of its pole and flag pattern formation on weekly frame, and daily it has come out of its long consolidation. So longer the consolidation, more the upside expected over here. So we can buy here with a target of around 17.15 and a stop of around 16.15. My second pick would be on Siemens. We've seen good amount of open interest addition over here on the long side. Weekly negation and follow-up buying at higher zones, which will take the stock higher. We've seen the stock has been continuously making higher highs, higher lows from the last 4 sessions, and a positive divergence can be seen on the RSI indicator. So it's a buy from here with a target of around 31.20 and a stop of around 29.45 levels.
All right, take that point, Shivangi. Thank you for joining in and giving us all those details. Let's also talk about a special segment where we get you ideas for profit coming in from our colleagues at Money Control Pro. Nitin Agarwal joins in.
So the company that I have chosen is Bosch Limited, an auto ancillary company. Let me first briefly touch upon its Q2 number. Bosch posted a year-on-year growth of around 25.5% in net sales, driven by a significant growth of around 29% in the automotive segment. The growth in the automotive segment came on the back of soothing supply of the semiconductor chips. What is interesting to note from the Q2 number is that a marginal contraction of around 47 basis points in its EBITDA margin, despite significant rise in the raw material prices. Rich product mix helped the company arrest the impact of the raw material prices. Now, there are multiple factors that make us bullish on this stock. First, on the back of a strong product portfolio, the company has a leadership position and has around 75% market share in diesel injection system. Secondly, Bosch continuously has been investing in the new age technology. In fact, it has earmarked around ₹1,000 crores for the new age technologies, apart from its normal expenditure. Thirdly, the industry outlook for the commercial vehicle segment continues to be very, very robust, as is evidenced by the wholesale monthly number reported by OEMs. With the pickup in the economic activities such as mining, construction, and infrastructure, we believe the momentum will continue. Further, the bus segment, which had been hobbled by the COVID pandemic, now with the reopening of schools, colleges, and offices, we believe that segment will also boost the growth for the company. Lastly, the company is currently trading at around 25.4 times FY24 projected earnings, which we believe is very reasonable for a company like Bosch. And hence, we advise investors to accumulate these stocks in staggered manner.
All right, thanks a lot for that, Nitin. Well, before we slip into a short break, just want to highlight a couple of stocks. Yes Bank, that's flying off the bat. Pull up the intraday chart on that one. Volumes as well, massive. It had a good session on Friday, and today as well, Yes Bank is the stock that suddenly moved to the high point of the day. For the time being, we'll slip into a short break. You come back, we'll track the market action. We'll also get chatting with the management of Advanced Enzymes. They'll be joining in to discuss how's the second half of the year shaping up.
Welcome back. The Nifty is now above that 18,500 mark. It's an over 150-point recovery from the lows, but the mid-caps are outperforming. And in that, we have a couple of these pharmaceutical names doing extremely well. Strides has moved to the high point of trade, gain of almost 5.5%. And Granules is the other one, which too has recovered smartly from the lows, currently sitting at the high point of trade. So these are a bunch of stocks which are doing well from the broader markets. But let's also talk about Advanced Enzymes. We do have Mukund Kabra, who's the whole-time director of the company, joining us now to discuss the outlook for the company's business going ahead. Thanks a lot, Mr. Kabra, for joining in. You, when we spoke last, said that you are expecting margins to be anywhere between that 40 to 48% mark in the second half of this year, when you expected some normalcy. The first half, you've done margins of around 27, 28 odd %. And now as we speak, things don't look any much better than what they were in the second quarter. So you want to revise that margin improvement outlook?
Good morning, Mangal. You are right. I said that we will go back to our trajectory of 40 to 48%, but it will require a few more quarters. If you really look into it, from the first quarter and the second quarter, our margins have improved. There is a slowness in the US market, and maybe in a couple of quarters, it should be come back to the normalcy. And then you will see that the margins will go back to our own trajectory. But it will require 2-3 quarters.
What kind of improvement can we expect in the second half, or can we expect any improvement?
We can expect a little bit better on the sale front, but margin will require some more time as we move on, because there is a slowness in the US market.
Okay, all right. Hi, Mr. Kabra. Good morning. You're saying, but ultimately you'll get to this 42 to 48% band. So in the second half of FY24, can we assume that you get back to this band? Is that a possibility? Point number one. Point number two, at the half-year mark, there's no growth in the business. What do you end this year with in terms of a growth?
We will be positive. How much percentage, I don't know at this point of time, but there is a lot of traction from the European market. There is particularly into the food segment. There is a good growth in the animal feed market. What we can see, we can see there is a good growth in the pharma sector and also in the biocatalyst area. The slowness is coming from the specialty division and the nutraceutical division. And overall, I see that we will be positive, but the percentage I cannot claim right now.
So you're saying for the year you'll see some growth, right?
Yeah, that's right.
You want to go with mid single digits or mid double digits, something in that vicinity?
Yeah, it will be a single digit.
Single digit.
Double digit is,
and the other question about margins going back to that 42 to 48%, second half of next fiscal, right?
That's what we can see at this point of time.
Okay.
All right. Your thoughts on the nutraceutical business, because you did say that it has seen a bit of a slowdown because of the US. And now, as we speak, a lot of people are expecting a recession in the next calendar year as well. Have inventories picked up in the US? Can you give us a sense of how that business is likely to do going forward? What proportion of your overall sales comes from there?
Yes, almost 40% of our sales come from the US business. Yes, you're right. There are certain inventory build-up in the US with the customer. The trend seems to be changing from this quarter. And probably as we move on in the next 2-3 quarters, we should come back to the normalcy. That's what at this point of time we can make it, but we'll see.
How do you define normalcy? I mean, could you give us a sense? What is normalcy? 15 to 20% growth?
The growth will come up. At this point of time, we see that there is a degrowth in the US market in terms of dollar revenue, or maybe it's more or less neutral. Yes, so the growth will come back maybe in 2-3 quarters.
Okay, all right. You also mentioned about this animal healthcare division. I think in the last year it was only around 10% of business. But I recall you told us that that's the big driver. For this year, what does it end in terms of revenues? Next couple of years, you will give us a trajectory. I think the number that you were guiding for is that at some point of time it goes to 200 crores, 150 to 200 crores. For this year, what does it end with? For FY24, what does it end with?
I'm sorry, but I don't have numbers at this point of time in front of me. But what I can say is there is a good growth which is happening from the Asian markets at this point of time. And there is a good growth which is happening into the food segment from the European area. So these are the two areas which is really driving it. Also, last time I mentioned about Russia, and Russia is also driving the growth in terms of food enzymes and other enzymes.
So could you give us a sense of how much these geographies will be as a percentage of your sales going forward? Europe was what, 5-6% last year?
Yes, so it's a slow movement, but the way I look at it is like in the Europe right now there is a lot of demand which is coming up, or the pool which is coming up from the customer. Of course, like in our business, to convert the customer into the business or revenue takes some time. So maybe in a two to three quarters we will see that. But before also, like we said in the last, in the next 4 to 5 years, we should be about 25 million dollar business in the coming from Europe and particularly from the food. And we see that we are on the track.
Okay, all right. The other aspect, Mr. Khabra, was I believe there were some supply chain issues in the first half of the year, and they were mostly unresolved. But the hope was that will gradually start getting resolved. Is that the direction that it's heading into?
Yes, you are right, like absolutely right. The prices are more or less stabilizing, but on a higher levels at this point of time. They are not really going down to the bottom levels, what we used to enjoy like last year. We are doing a lot of work on the R&D front to improve the productivity and to neglect that. Some of the small amount of the cost we are trying to pass on as well. So overall, we are working on it, and probably it should be okay.
All right, we take that point. The last time we spoke, it was also on the back of the promoters' stake coming down in the company, and you had assured that the promoters aren't looking to sell any more of their stake in the company itself. But at the same time, a lot of the analysts also believe that maybe a significant acquisition or some sort of key management appointment, etc., or leadership appointment or strengthening could actually be re-rating triggers for you. Could you give us a sense of what you're thinking in that direction in terms of M&A and any sort of additions to your team?
First of all, like I never said that the promoters' stake will come down or it will not come down, because as I always said, there are like two promoters. One promoter still has 7% of stake, and I'm not sure like whether he will sell or he will not sell. In terms of merger and acquisitions, yes, we are always looking for the merger and acquisition opportunity. At this point of time, also like we are looking for a couple of opportunities. In the last board meeting, we have announced a small acquisition, but that will really help us in building the plant-based enzymes into our portfolio, and we'll see as we move on.
You think that you can close out something in this fiscal itself? We have only 3 months to go.
Maybe in this fiscal or maybe in the first quarter of the next fiscal.
Okay, and the size would be how much? Couple of 100 crores?
No, it will be smaller, maybe towards the half of it, but let's see.
100 crores?
Yeah, 70-80 crores, roughly.
70-80 crores. Good speaking to you, Mr. Khabra. Let's hope that things recover from here on, and FY24 is a far better year for you than what FY23 is shaping up to be. As we speak, the stock in the last 12 months, in fact, is lower by 12% odd. But if you pull up, I think, today's chart, if I'm not mistaken, it's at the high point of the day. Well, we'll slip into a short break. You come back, we'll focus on markets and a couple of stocks as well. Welcome back. You're tuned into Chartbusters here on CNBC-TV18. Markets at the high point of the day. The mid-cap index as well is doing fairly okay, keeping in step with what the frontline index is doing. Number of stocks advancing way more than the number of stocks declining. So the gap is closer on 500 stocks. So you like that. And in terms of stocks that are moving around, JSPL has moved to the high point of the day. Let's see how that one moves. Remember, the street is buzzing with excitement that maybe they'll close out that Monnet Power asset sale. So how much more money they'll have to put in there and what is the benefit to them? We'll have to find that out. For the time being, the stock is flying away. Bharat Forge, they're talking about better margins, good growth and ROCE improvement. So that one as well is bouncing up in trade. And you have Ashok Leyland. Just take a look at the intraday chart out there. Stock is gradually moving higher. From the broader markets, well, you have Piramil Pharma as well. That's seen a bit of a bounce from the day's lows. Mangalam looking pretty good as we speak. The Nifty holding above that 18,500 odd.
Indeed, it is. So that's actually a good time to wrap up on this edition of Chartbusters. You stay tuned. Trading Hour comes up next.
Co-powered